Good morning everyone, and welcome to the PivotBoss pre-market video for Friday, July 17th, 2020. I am Frank Ochoa, aka PivotBoss. Happy Friday everyone. Here's a look at the daily time frame of the ES. One thing I want to show here about the ES is how narrow the range has been over the last couple of days. This range up here hadn't seen anything like this in a while, where it was kept within a very narrow range, with both sides of the range being tightly defended to bring participants into the market at that point. We've now extended that out to a 3-day range here that is developing, as today's not finished yet, but it really brings back memories of how this thing developed in the second week of June, just before we saw the impulse sell-off down to the 29-22 lows. So again, building out a very narrow 3-day range. You can see down here again, the range isn't finished for the day, but as that currently stands, we're at 44% of average range. Again, less than half of average range. It's usually around 93 points. We're at 44.75, and again, we could be looking at a significant breakout here ahead, one way or another. Again, when we have narrow range compression like this, it really doesn't give directional bias. The overall trend suggests more upside, obviously, but we are at major resistance here, and a failure to break out in either direction could slingshot price in the opposite direction for a big breakout. So for example, if we were to try to break through these highs above 32.35, 32.50, and then fail back below, that could lead to a major slingshot move in the opposite direction. The opposite can be said as well. If we were to break down pretty significantly and then slingshot back up, it'd be another failed low like we've seen before, and we could really see a pretty significant breakout. The last time we had this 3-day narrow range, we got one of the biggest one-day sell-offs we've seen since the COVID sell-off began. And again, we could be building similar energy now. So again, when we do get the breakout on a 3-day range basis, while the average has been 93, we're going to see likely a bigger than average move of about 125% of ADR or more, which would give us at least a breakout move of 115 points right now, and perhaps even higher. So that's just on a 3-day range basis. So again, keep an eye on this range right now. Very curious how narrow that range is, and it's definitely building up that energy for the next major breakout move. If it's to the downside, we could easily see a return right back to this 30.77.5. And if it's to the upside, again, we could be starting to make a move toward those upside breakout targets. Again, we have those major targets we've been talking about based off the key range. The first one would be 33.85s. And right now, if we get that upside break, perhaps we can get a move to that edge. Overall, the trend remains bullish. And so again, if we were to break down, any rejection could still be a nice continuation to the upside unless it fails to respond. So we're going to continue to watch this 3-day narrow range for signs of expansion later today or perhaps in the days ahead. All right, let's take a look now at the NQ. NQ has very similar price action here, with a narrow range developing over the last few days as well. Again, this is a developing narrow range, so we're at 61.5% of ADR, and that again leads to compression. Here was a 3-day narrow range, boom, increase of volatility, right? Narrow range here, increase of volatility. Narrow range, increase of volatility. That's what we're likely going to see pretty soon, and that could take us to about 568 points of range pretty soon. So right now we're going to continue to watch this. The previous session was building out a very nice failed new low for quite a time, and then right at the close, Netflix earnings came out and pushed the NQ down to close right at or below the previous session's low and just above the rejection day midpoint. So this is kind of gray area here for this market, as again we continue to hold in this Pima trigger zone, which has been a very bullish zone to defend time and time again during this rally we've seen, and it could still lead to a nice push higher. But if there's a failure to really maintain acceptance above that 10.525, which we've talked about from Tuesday's midpoint there, that rejection day, that could open up a pretty significant reversal back toward 10K, maybe down to the recent pivot low there just below 9,800. So again, everything remains bullish and trending higher right now. Clearly yesterday here, taking a little bit of heat late in the day there to finish weak although price had been much higher and was looking like a great squeeze. So again, if price can start pushing through 10,800, it opens up quite a bit of upside here. But we're going to continue to watch for signs here of which way we're going to break out from this 3-day narrow range. Here's a look at crude oil. This one's down about 0.4%. We've talked about how incredibly strong that 41 resistance level has been. If you look right here, again, we have a very narrow range throughout the month that is developed. Now we have a very narrow 3-day range that is developed. Yesterday was an inside day. Here's your 41s right there. And again, that 41 is very clear resistance throughout the month. It just doesn't want to get beyond that area ever since the rejection in late June. So nice resistance here throughout the time. We still have an uptrending market here, as evidenced by the rising PIMA trigger zone. But this narrow 3-day range, again, you can see very narrow. It's 58% of ADR. It typically averages about 1.94 points, and we're at 1.18 points. And if we do get a breakout here pretty soon, we could see about 2.5 points of movement on a 3-day range basis here upon a breakout. So again, got to continue to watch those 41s. If price can get through that area, we might have a very nice upside break of 2 to 3 handles to the upside, which could take us into that 43 to 44 zone we've been talking about. If there's still a failure here to get going to the upside, perhaps we rotate back down to recent support. But right now, very quiet price action for CL up here, and if it can't get going through those 41 soon, perhaps it's going to need to take some stops out on the downside first. So again, continue to watch this narrow range in crude. Here is a look at gold futures, and with gold right now, you can see this one has been continuing to hold above that 1800 level. It has developed a very narrow range above that zone here, where it's basically just held, bringing participants into the market here. Again, it continues to hold inside the bullish PIMA trigger zone, which has been bid. But yesterday was the first time that we closed below the 8 period there. So you can see the 8 periods here, we closed below it. Every other time it has been able to jump back out of that zone very quickly by the end of the day. Right now we are seeing a little bit of a bounce, but again, these lows here are going to be very important, because if we continue to see rejection up here, it could open up a wider pullback here, at least on a near-term basis. Obviously, we've mentioned before that the upside break remains intact as long as price remains above 1750 overall, but we could still pull back ahead of that and still be a buy here. But right now, again, that narrow range above 1800 is curious. If it can't get going soon, perhaps again it needs to auction lower first. So continue to watch that narrow range in gold. All right, that is it for now. We'll see how this develops heading into the rest of the session. Good luck, trade well, happy Friday, and I'll see you in the trading room. Take care.